Tremors have rippled through the $25 trillion U.S. credit market.
We had an exposure to Tricolor. I'm obviously not happy about it.
This story is about the sudden, unexpected, spectacular collapse of a subprime auto lender backed by some of the largest banks on Wall Street.
Tricolor's collapse in the subprime auto lending space could be the tip of the iceberg. A used auto dealer and lender named Tricolor suddenly filed for bankruptcy in September after alleged fraud was flagged in their books.
You're looking at hundreds of millions of losses across the industry.
When Tricolor started to go down, it set off a wave of fear on Wall Street. Everybody was wondering, what's the next shoe to drop?
The credit market has stopped buying some of these subprime auto loans, and investors have started pulling away from more risky borrowings.
Around the same time, there was another company in the auto sector that was also dealing with accusations of fraud, and that was First Brands. These bankruptcies have been giving Wall Street serious pause.
Daniel Chu, the CEO and founder of Tricolor, started the business in 2007. His goal was to provide business and loans to underserved populations, including immigrants.
Tricolor was a car dealer and a lender, meaning if you showed up to one of their dealerships, you can also get a loan there, and that meant that Tricolor didn't have to rely on outside parties to give people loans.
Its subprime customers were paying higher rates. That's one of the reasons private equity was interested in this kind of lending. It was giving yields that were not seen in other parts of the market.
Between 2018 and 2021, the company's dealership network grew by nearly 50%. If you look at interest rates during the pandemic, they were super low, and this allowed Tricolor to sell tons of bonds, which meant it was essentially borrowing lots of money from Wall Street, and it was using that money to propel its growth.
Tricolor was previously getting its loans from private equity and regional banks, but because of its growth, it was able to catch the eye of JPMorgan. In 2020, JPMorgan agreed to provide a $100 million warehouse loan to Tricolor. Eventually, it swelled to $770 million from JPMorgan and other investors.
Tricolor was growing rapidly, but eventually they ran into some red flags. In 2022, external auditors raised questions about how Tricolor was valuing its assets.
A couple months ago, a junior analyst working with JPMorgan flagged there was trouble with the collateral backing the loans, including some of them being pledged more than once. Double pledging meant that one car was used as collateral for multiple loans because Tricolor was buying and selling at such a fast rate.
JPMorgan called up Daniel Chu, who was in Italy, and told him urgently to get over to New York City. Then there was a frantic scramble to find out what had happened and how to save the company. JPMorgan hired outside advisors to try to raise temporary financing to keep the company alive through bankruptcy.
As everything started to fall apart, JPMorgan pulled the plug, and investors began to follow suit.
But because of the severe fraud allegations, banks were scared about providing even temporary financing, and ultimately they weren't willing to do it.
On September 10th, Tricolor filed for Chapter 7 bankruptcy.
We can blame due diligence, we can blame massive concentration, but at the end of it, this is what happens when people chase yield.
Daniel Chu's empire, including the dealerships, warehouses, cars, and loans, will be sold back to investors some of the $2 billion that is owed to them.
As all this was playing out, people on Wall Street were wondering, is this isolated or is this emblematic of something larger?
My antenna goes up when things like that happen, and I probably shouldn't say this, but when you see one cockroach, there are probably more. And so everyone should be forewarned on this one.
Similar auto companies can expect higher interest rates from Wall Street lenders, a pullback in lending, and increased inquisitions into their business.
As we get a clearer sense of what exactly happened to Tricolor, people on Wall Street have been wondering, is this isolated, or does this tell us something about the wider economy? If it's something larger, then maybe it doesn't matter today to the average person, but in the future it could.